And a warm welcome to one and all. And if this is your first time here, the overgrown child, that is the Scruffy trader. And it must be true, because it says so on my mug. Well, it's also true because she says so. And this is, what do you mean it is true?
You ask her?
It is actually. I'm one of these that you put £1,000 suit on me and 10 minutes later I look like I'm being pulled through a bush backwards. What can you do? But I mightn't be very polished as a human being. In fact, I'm about as gruff as it gets at times.
Are you serious?
But I am pretty polished on the charts. And why? Because I'm disciplined. And I know what I have to do and I know what I need to do at the right time. And time is the basis of this video. Something that you're struggling with at this moment.
Is that right?
It is. And the reason being is you can't cope with downtime. And downtime is when you are underwater in a trade and you have no margin left, so you have to sit through it. And that's creating issues because you naturally panic and you just want to grab at things. So if it moves a fraction into profit, you'll grab it. Why? Because you haven't allowed time. Now what I'm going to do is I'm going to go on the whiteboard, kind of give you a glossary of breaking time up, but also as a little salute to Kitsu. Emails me from time to time and did this morning, and it resonated something in me about the different times that we trade. Now you can trade whenever you choose. The markets are open 24 hours a day for 5.5 days a week, you know, Sunday night through to Friday night. Now, if you break that down to just Monday through Friday, that's your working week. So you have defined time. But you can narrow it right in. And I'm going to kind of give you something to think about on the whiteboard. So bear with me and I'll fire it up.
Well, we're waiting.
Okay, guys, so we're going to have a little chat about time. And why is time important? Well, I kind of struck a chord when I got an email of Kitsu I was mentioning earlier. So a good salute to you, my friend. And don't worry, summer's coming soon. And he's discussing that he likes the S&P 500 and only really trades the US session. And I kind of figured some of the questions I get all the time. When's the best time to trade? What products is to trade? Which is the best time frame to enter on? All of this sort of thing. Well, they're all interesting questions, but they're different to different people depending on where you live and your personal circumstances. Now, for me, I day trade for a living. I'm not a lover of swing trading, although I do have swing trade accounts, and I just kind of set and forget them. But when I'm trading, I'm in the moment. But while I'm in the moment, I have planned for that moment. And the next question that's always asked to me is, well, how can you day trade around a day job? Right, okay, you still can. Think of it this way. Now, the markets are 24/7 if you include crypto. And I've kind of picked the wrong time to enter into the crypto market when it's all crashing down. But there will be some videos from a beginner's point of view coming out shortly because I've got my head round it. If you want to follow the journey, there's a couple of free accounts that you can sign up to. There's extra bonuses with them as well. There is Binance, which I trade on, which is derivatives. And no, it's not actually. It's Binance is where my spot account is, my cash account. Bybit is where I trade derivatives. Sorry. But there is links below, and watch out for the videos if you want to follow the journey and use the same platforms. But essentially, we mostly trade Forex and indices. So that's 24 hours across roughly 5 days. Sunday night through Friday night sort of thing. But think of it this way. How much time have you got? Well, if you sleep 8 hours of the day, so 8 hours you're having a bit of a snooze, or in Winky's case, it's about 18, I think. Um, typical woman. But you might work for 8 hours as well. So there's 8. So 16 hours of that 24 have already gone. But then if you are working, I'm assuming you've got to get there. And even if you're working from home, you still got meal time and sort of breakfast time, etc. That could be 2 hours, an hour either side of the working day. How much time have you got left? Well, you've done 18 and you haven't spent any time with your family. And I do implore you spend time with your family, because if you are to be successful as a trader, you need your family on your side. Don't let your trading overtake your family world, because it'll become a bone of contention, especially in the early stages when you're getting things wrong. You need your partner or your kids, whatever, to be supportive. All right? Just put a little bit of time aside for them. A couple of hours for have dinner and play, that sort of thing. So what you're left with is 4. So you've got 4 hours, which is yours, by just breaking up your day. Now, I base things on UK time because that's where I live. So if I'm working during the day and I get in at 5 and I want to spend a couple of hours with the kids, that means I don't start work or start trading, me time, till 7 o'clock. So I know I've got 4 hours. So I have 4 1-hour blocks to trade. And why look at the hourly? Because I've already defined what my anchor is, which is 4 hours. I have 4 hours to trade. Okay, so if I use that as an anchor point, I can then break down my time. And this is what I'm driving at. Now, when you first rock up to the chart, you'll be presented with that line. And if you haven't seen that line before, it's what's called the hard right. In other words, the profit is made through these time frames, and we would have 4 hours prior to it. I'll explain this one in a second. Each one of these gives that time frame. Okay. This is an echo of the past because we know what's happened. We've seen it. This is a vision of the future. What we're going to do is we're going to use that echo to try and figure out what we're going to do with our trading time. And time is the key. I'll kind of hit it home over and over. So what do we do first of all? Well, if it's 7 o'clock at night, 7 p.m., what point can we get from this? What is time telling us at this point? Well, it defines the session that we're going to trade. It doesn't matter where you are in the world, but when you look at it, it'll define your session. Because if you're in Australia, you might be awake when it's the Asian session. If you sort of UK like me, it can be the London session up to 4:30, but at this instance I am UK at 7 o'clock at night. By definition, it is the US session. Right, so what's this got to do with a slice of bread, Scruff? Where are you going at? Well, if I know it's the US session, I want to know what banks are open. Well, it's New York, isn't it? So if I'm looking at currencies, it's going to help define product. And that product is USD. So whatever I'm looking for wants the USD in it. Now, how can I sort of build up the pair? Well, what happens is you're looking for the session that's coming in next. So London shut down. All of that business is kind of finished. You're trying to anticipate the next set of business. And the next set of business is the Asian session. So you would then be looking to pair it with AUD, Kiwi, JPY. Why? Because they're all sort of majors and the money flow is going to work when the banks are starting to sort of wake up to do business. Now, what else can we look at? We might like indices. So which indices are open at this time, trading actively? You've got the Dow, you've got S&P 500, got the US 100 or the Nasdaq. So you've got 3 indices you can look at. But what else can we look at? What else is active at that time? Well, you need world drivers, something that will be available at that time. Well, that's gold and oil. So you can look at gold, oil. What else can we look at? Well, if you start drilling right down into it, you could start looking at the coffee markets, sort of the New York Robustas, that sort of thing. But it depends on how far you want to go. But if you're looking at majors, that's already giving you a good basket of products. So why is that important? Because it's telling you at 7 o'clock when we're trading, they're active. Right. So if they're active and I've figured out my product, what else can I do? Because as you saw, there's quite a bit of product there. Need to thin the herd out. So how can I thin the herd out? We know what our anchor is. We've just decided it's the 4 hour. Why? Why not? I mean, you could have an anchor as a day, but I'm using 4 hours as an example. It's time frame up from where you're going to trade. If you look at the ATR on your anchor chart, it'll tell you how far the product is going to move in said period. That's why we've got 4 hours, because we've got 4 hours to trade. I want to know how far it's going to move within that period. Now, if it is sort of minus 30, in other words, it's less than 30, I'm not interested. No. If it is plus 30, I am interested. Why? Because you often see me trade and I say I'm looking for 10 pips. Now, I'm not necessarily looking for 10 pips. I'm looking for as much as I can get. What the 10 pips represents is a break-even point. It is a line that I'm looking to achieve that I know is worthwhile to my time. And that's quite important. So where's 30 come into it? Well, I work to a rule of 3. So I'm not looking for the bottom third. I'm not looking for the top third. I'm looking for the bit in the middle. And a 30 ATR will give me that. So the ATR is quite important. So what I'm doing is I'm working my way down in a structured way, right? So I'm looking for the products that I can trade in the session. And then out of those products, I want to see the ones that can move in that session. And once I've filtered all of those down into a little basket, I then need to work out the third part of the puzzle, or the third part of the echo. I want to know if it's going up or whether it's going down. I want to know the bias. So how do I get the bias? You look at the products that you like the best and you analyze the last 4 candles. Why the last 4? Because they make up that 4 hourly candle. And you can simply go, well, that was green, that was green, that was red, that was green. What does that represent? Well, the price went up, price went up, price went down, price went up. So we have 3 up, 1 down, it's going up. Is that enough? Of course it's not. You need to confirm it. Now you can do confirmation in another way. You can say, right, well, I'm going to look at the 4 hours prior to that. So you're looking through your time frames. You can look at a moving average? Is the price currently trading above it, or our price? Yes. So when I come to here, the first thing I'm looking at is this 1 hour candle. Is it also trading above? Now this could be a 20 for argument's sake, 50, whatever. Is it also trading above a moving average? Yes, right. I've established that I think it's buys. The first hour is telling me it is buys because it's above a moving average. In other words, I'm just trying to put clues to the puzzle. Right. So that could take up your first hour. Why? Because you shouldn't just rock up to the charts and go click. That's stupid. You know, it's gambling. Spend an hour looking at the chart, understanding the chart, looking what you're trying to achieve. You've now got 3 hours to make that become a reality. So how do you do that? Well, we've established we are only looking for buys, and it's being confirmed with the first hour. So on hour 2, we drop down into 4 15-minute candles. So I'm now monitoring on a 15-minute. And what am I looking for? The same criteria based on this hour. So I'm looking to see if the sentiment stays the same, and is it coming to a trigger point. So what's a trigger point? It can be something as simple as a level. Levels are the single most important thing you will put on your chart. Without them, you're trading blind, and that's it. You're basically trading blind because they are derived from the one indicator that is always constant, which is price. If you're relying on sort of MACDs, moving averages, CCI, RSI, stochastic, there's hundreds of them. They're all lagging. So by the time you've come to chart and you sort of think, well, this is what's going to happen, the move is possibly already done, which is why you need an echo of the past. Not to define the trade, to give an idea of the trade. You then need a confirmation that your idea is correct, and then you drill it down into a tighter time frame just to reinforce it and fine-tune the entry. Now, this mightn't happen till the third 15-minute in. So you've seen the price come down. And you think to yourself, right, I'm at a level now. What's going to happen? Well, there's 2 things happen at levels. It'll either bounce off it or it'll break it. It's called a bob level, you know, bounce or break. Now, if that's where the trigger is, this one here can show goes up the other way as a confirmation, and you put your target above it. So when it comes into hour 3 and it triggers in, you've got the wind in your sails, and then you are targeting up to the next level at a minimum of your 10 pips. And that's time management. It's working your way through the chart, and all you've done all the time is filter out the noise and then focus in on a single idea. I hope that gives you something to think about. I genuinely do. And if you do message me, you'll find all my contact details in the comments and description. And if you drop in the comments, and I implore that you do, I answer every single one of them. And hopefully it might have sparked a little light bulb moment. And if you want to spark a little light bulb, do hit that little like button, and it's amazing, it turns blue. Fabulous. And it also helps me. So do subscribe, keep your questions and your comments coming. I'll do my best to answer them. And if you want to see fully how I trade, drop in the description, you'll find details of the Scruffy Squad, the Discord that I run, and you'll see it on a daily basis before the trade's taken, while the trade's in process, and then the results afterwards. I can't be any fairer than that, guys. So as always, trade well, keep your risk managed, work on your time management, but above all, do what you love, and the money will follow. See you all in the next one.